You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, for 30th day of April, 2024. Thanks for joining us. Whoever you are, wherever you are, we're just glad you're here, right now. This is our second live broadcast of the day. We do 2 every trading day. Now, the first broadcast is private. That's members only and those taking the 1-week free trial. If you have not taken the 1-week free trial, you can do so by going to mytradingiq.com, and at the very top of the page there's a link. 5-day free trial, no credit card required. Click the link, complete the registration form, and take a minute to make sure you do it properly, because it's an automated process. If you don't do it properly, then it gets lost in cyberspace. We don't get it. You don't get a free trial. Nobody wins. So let's have a win-win, as Tony Robbins would say. You fill it out right, we get it, and then same day, in most cases. Get your desktop set up, get your indicators indicating, and the following day, your trial actually begins. Now, don't worry, you get 5 consecutive trading days, even if it stretches over a weekend. In fact, if it stretches over a weekend, you get 2 extra days that don't count against you. It's a pretty good deal. Now, when you take the trial, of course, you're going to have access to the live training room 2 hours every trading day, as all of our members do. But in addition, you'll have access to everything else that our passport holders have access to. One-on-one mentoring, Logic 247 alerts, concierge trade alerts, weekly trading zones. The only thing you don't get that our passport holders get is the members only workshop on Thursday night. And when you become a member, you'll get the golden key that opens all the private channels in Telegram, and that includes all of the archived members only workshops going back years. So you get a lot of bang for our buck, because it doesn't cost you anything. So when you take the free trial, make sure you take advantage of all the resources at your disposal. Okay? This way, at the end of the 5 days, you can make a well-informed, intelligent decision as to whether or not trading is right for you. Okay? Now, when the live training room ends each day at 11:30 a.m. Eastern, take a 30-minute break and come back for the afternoon broadcast, this broadcast. Now, there's a couple different ways to join the afternoon broadcast live. The best way is to go to mytradingiq.com and scroll down to where it says afternoon broadcast. Click the link, fill out the 30-second registration form, and you're done. Never have to do that again. What will happen is every trading day, about an hour before this broadcast starts, you'll get an email. In the email, there's a link. So at 12 noon Eastern, you just click the link in the email and it automatically logs you into our platform. There's a couple benefits to doing it that way. You have access to the question box. You can ask questions and participate in the discussion. There's no 10 to 15 second lag. And I don't start monitoring the YouTube question box until 12:45 when Michael shows up to do the recap of the live training room. Then we go live on TradingView for 30 minutes. Then we wrap everything up with our good word for the day. Now, there's going to be days that you're out of the office, away from the desktop, but you still want to join live. You can. And there'll be days when you're busy and you can't join live but want to get caught up later. Do that. I'm talking about our YouTube channel. It's very easy to remember. youtube.com/CFRN. You've already got the YouTube part memorized, so all you got to remember is CFRN, Christian Financial Radio Network. So you don't have to type all that in, you just have to type in CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,500 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week. Thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch all of those, but pick some days at random. Watch a little bit, fast forward a little bit, go to another day, repeat the process. Pretty soon, you'll have a pretty good idea of who we really are. What we do, how we do it, even why we do it. youtube.com/CFRN. All right, let's open with our daily devotional and a word of prayer, as we do every day. We'll dive into the markets. This is our final day on this particular topic, living changed, overcoming spiritual warfare. Now, we're not the only ones who have had to deal with spiritual warfare. Jesus himself dealt with it. Luke 22, verses 41 through 44, from the Message translation. He, that being Jesus, pulled away from them about a stone's throw, knelt down and prayed, Father, remove this cup from me. But please, not what I want. What do you want? At once an angel from heaven was at his side, strengthening him. He prayed on all the harder. Sweat wrung from him like drops of blood pouring off his face. It's Luke 22, verses 41 through 44. Okay, our final day on this topic. living the changed life that we're promised when we become believers. It doesn't say the easy life. It says the changed life. Because we are filled with the Holy Spirit and given the mind of Christ. So today we'll talk about purpose over pain. Emotional, physical, and relational pain are all a part of spiritual warfare. In the book of Job, we read about God allowing the enemy to test his servant Job through warfare. Despite his frustrations and pain, Job continued to put his hope in the Lord, trust his promises, and persevere through it all. Jesus knew that he was going to die a painful death and that the cross was coming. But he responded to the call by declaring to God, "Your will, not mine, be done." He knew that despite the pain, he had a purpose. When you push through the pain, like Job and like Jesus, you'll find a deeper intimacy with God and strength in his promises for you. When we focus solely on who God is and what God is calling us to do, we can respond to his call despite the challenges that come our way. You see, your purpose is stronger than your pain. Focusing on your purpose releases you from your past and frees you to use your story to help others. What purpose are you called to beyond the pain? Spiritual warfare doesn't come without scars. The skin around a healed wound is tougher and stronger. Don't let the enemy shame you from showing your scars. The scars from your battles tell your story. When shared, your story gives God glory and brings purpose to your pain. Jesus showed he overcame the grave and declared his victory by showing his scars. Your scars can be a tool to bring others to their purpose and inspire them to push through their pain. When we show our scars, we stay vulnerable to others. When we can be vulnerable with others, we show them they can be vulnerable with God. Remember, you are a survivor, so don't keep it to yourself. Show your scars, share your story, and help others through the battles they are facing. Your testimony is a promise that they too can find purpose in their pain. Join me in a word of prayer. Heavenly Father, as we come before you today, what a powerful example in Luke 22, where Jesus earnestly prayed in the Garden of Gethsemane. Lord, we thank you for the depth of Jesus' love and his willingness to surrender to your will, not his own, even unto death. Lord, we ask that you teach us to pray with the same humility, trust, and surrender as Jesus demonstrated. Help us to submit our desires and concerns to your perfect plan, knowing that your ways are higher than our ways and your thoughts higher than our thoughts. In moments of uncertainty or struggle, may we find a refuge in prayer, pouring out our hearts before you and seeking your guidance and strength in everything. Like Jesus, may we find comfort and assurance in your presence, knowing that you are always with us and that your grace is sufficient for us. Lord, we lift up to you today our burdens, our fears, and all our uncertainties. Help us to trust in your providence and to surrender to your will, knowing that you are able to work all things together for good, for those who love you and are called according to your purpose. And we thank you, Lord, for the gift of prayer and for the privilege of coming before your throne of grace with confidence. May our prayers be pleasing to you, and may your will be done in our lives and in our world. It's in Jesus' name we believe and pray. And everybody said, amen. Well, amen, and happy Tuesday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Dow is down 316 points, almost 1%. Nasdaq's down 128, almost 1%. S&P 500 is down 34. And the Russell 2000 is down 25. Now for the Russell, that's a drop of 1.25%. Red, red, and more red. And the commodity basket, well, red seems to be the color of the day. Crude oil down 76 cents, trading 81.87 last. It's a drop of almost 1%. Gold down $48.20, trading 23.0980 last. That's a drop of over 2%. Silver down 94 cents, trading 26.72 last. That's a drop of 3.5%. Now remember, when silver moves $1 in price, that's worth $5,000 per futures contract traded. And silver again is down today, right now, 94 cents. In the Asian markets at the close, the Nikkei posted a gain of 470 points. That's 1.25%. Shanghai dropped 8. The Hang Seng gained 16. And in the European markets at the close, FTSE down 3. The DAX down 186. That's a little over 1%. The CAC down 80. Basically 1%. So that gave us a mixed day in Asia. It was a red day for the UK. And so far, it is a big red Radio Tuesday here in the US of A. What in the world is going on? Well, basically everything we've been talking about. for weeks, months, maybe. All right, let's start here with this. Consumer confidence fell sharply in April as inflation worries and a downbeat outlook on the job market pushed optimism to its lowest level since 2022. The Conference Board's Consumer Confidence Index retreated to 97 in April, below economist expectations for 104, and lower than March's reading of 103.1. Consumers have become less positive about the current labor market situation and more concerned about future business conditions, job availability, and income. According to April's write-in responses, elevated price levels, especially for food and gas, dominated consumers' concerns with politics and global conflicts as distant runners-up. In addition to the confidence index, consumers' expectations for the next 6 months also fell to their lowest level since July of 2022. The Conference Board reasoned this was driven by a more pessimistic outlook for future business conditions, labor market conditions, and income expectations. On a 6-month basis, the Conference Board noted that confidence among consumers earning less than $50,000 per year has been stable, while confidence in those earning more has weakened. Go figure that out. I think Paul actually wrote about that in Scripture. Not this particular report. Learning to be content wherever you find yourself. So I just gave you the numbers, so no surprise, stocks are down. Remember, futures follow stocks, not the other way around. U.S. stocks sank lower this morning as new labor data came in hotter than expected, while investors await the Federal Reserve's upcoming interest rate decision, that's tomorrow, along with earnings from Amazon. S&P 500 and the tech-heavy NASDAQ composite each slipped roughly 0.7%, 0.8%, respectively, after closing yesterday with some itty-bitty gains. The Dow Jones Industrial Average fell about 0.8%, while the yield on the 10-year Treasury jumped about 6 basis points, trade near 4.67%. According to new data released by the Bureau of Labor Statistics early Tuesday, today, the Employment Cost Index, which measures compensation and benefits, increased 1.2% from December to March, the highest increase in a year after rising 0.9% at the end of 2023. Stocks are on track to post their worst month of 2024, as a brutal mid-April stretch means the major indexes are set to end the month with losses. But investors are looking to continue making headway on a rebound that has pervaded over the last week. Thus far, anticipation over the Fed's next move is battling for attention with better than expected quarterly results, with surprises from the likes of Paramount and Tesla playing their part. Paramount, gotta say, not a fan. Tesla, not a fan. And I'm not talking from a stock perspective. I'm talking from a user experience. Just Just not exciting. Now, Amazon's results come after the bell. Those will be closely watched. After Microsoft and Alphabet's stellar earnings lifted hopes for a magnificent 7 boost this season. So far, big tech results have both impressed Wall Street and revealed its impatience with heavy AI spending. Now keep in mind, any rally in a universe of 8,000 stocks, 8,000 plus, riding on the back of just 7, how long is that going to go on? Right? Okay. Well, there's the news. Let's jump over here real quick. Get this done. Logic 247. We are now in week 300. And over the last 300 weeks, we've issued over 15,600 individual and crafted alerts. We've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure, and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, Valerie did this recap today at 6:45 a.m. Eastern. So some things have probably changed since then. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 18 alerts. Still waiting on the outcome of 9, or half of them. It gives us 9 actionable alerts, of which 1, or 11%, would have been stopped out based on market structure. And that very simple process that we teach all of our passport holders in their unlimited one-on-one mentoring sessions. Apologize for the noise. Could wait it out, but not. It's what we here in the Valley of the Sun call solid waste collection. What is that? 4 times a year. All the crap you have in your backyard and your garage, stuff that won't fit in your trash can and you don't want to take to the dump. 4 times a year, they allow you to just put it out on the curb. And as I speak, they are picking up our old composter, the forklift, and they're putting it into the smasher. You know, the big trash truck that smashes everything. This is how exciting my life is, right? I'm talking to you about garbage. All right, moving on. Let's see if we can find something more interesting. All right, so that's the logic alerts. Now, as I said, we're in week 300. Long before we had Logic 247, we had the concierge trade alerts. And they're a little bit different in a few different ways. The logic alerts can come out around the clock, anytime, day or night, 2 a.m., 2 p.m., because futures trade around the clock, and we have traders around the globe. Our day session is their night session. Wow, that is brutal. I think he's almost done. Now, with the logic alerts, you have an entry price, an initial target. That's designed to help you get your goal for the day. Then you may have 2, 3, 4, 5 or more targets, and then a final trade to target. Where do those targets come from? Well, I'm going to tell you. By looking left. If it's a long alert, you're going to be looking left for previous swing highs that can become current resistance. If it's a short alert, you're going to be looking left for previous swing lows, which can become current support, right? Previous swing highs equal potential resistance. Previous swing lows equal potential support. The purpose of the alerts, it's not so you just trade the alerts and don't worry about learning how to trade. They're an educational tool to help you learn how to trade. If you will do this, if you really want to learn how to trade, first you have to learn to spot the windows of opportunity. At 2 hours a day, Michael teaches you exactly how to put on a trade, manage a trade, and exit the trade. Okay? The alerts show you where the opportunity is from a bigger picture. Okay? So when a logic alert comes out, even if you don't trade it, go to the 30-minute chart. Draw a horizontal line at the entry, at the initial target, at any additional targets, and then of course the final trade to target. On a long will be the zone above, on a short the zone below. If you'll repeat that process on every logic alert that comes out over the next 2 weeks, you won't need the logic alerts anymore, because you'll be able to spot the windows of opportunity in the market yourself. It's so simple. So simple that most people don't take the time to do it. Now, the CTAs are your next step up the ladder. Okay? This report, or the CTAs, don't come out around the clock. They're published as a static report shortly after the Globex open each evening. So last night, Tuesday session began at 6 p.m. Eastern. This report came out 20 minutes later. Covers all these markets. Same as logic. First thing you do when the report comes out, go to the 30-minute chart of whatever market you trade and make note of where price is at the time the alert comes out. It's always going to be between these two numbers. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BVC, it's attempting to reach the long target. If price gets below the 30-minute BVC, it's trying to reach the short target. BVC is simply the green line you see on all my charts. If price gets above the green line, then we're bullish and anticipate higher prices. If price gets below the green line, we're bearish and anticipate lower prices. Now, that's relative to whatever time frame you apply the BVC, but for the purpose of the alerts, it's the 30-minute chart, because all alerts are created from the 30-minute chart. Both the Logic 247 alerts and Concierge Trade alerts. That part's pretty simple. Now, with the Logic alerts, I look left for you to spot potential obstacles, but with the CTAs, you're starting to learn to look left yourself. Remember, we want you to become self-sufficient. And if you want to trade for a living, that will never happen as long as you need somebody else to tell you when to get in and when to get out. Purest form of information you're ever going to get is from the chart. So you've got to learn to read the chart. If someone handed me a book written in Mandarin, it would literally be worthless to me, because I don't speak Mandarin, I don't read Mandarin, I don't understand Mandarin. Much the same with charts in the markets. They're giving you tons of information, but you've got to learn how to read that information, like a newspaper or even a mystery novel. That will take a little time. If you're not willing to invest the time, guess what? You'll never trade for a living. That's just the way it is. So with the CTAs, you're learning to look left yourself, and you're learning how price behaves at a weekly trading zone. Price is always trying to reach a weekly zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BVC, it's trying to reach the weekly zone above. If price is below the 30-minute BVC, it's trying to reach the weekly zone below. We've published the zones for our members every week since December 14th of 2009. Almost 15 years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. Beyond that, just resist the urge to make it more complicated. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So how do you know which way the wind is blowing? Well, this is the daily candle of the S&P 500. Would you say that's a southerly breeze or a nor'easter? I'm going to go with the southerly path, right? Red candle. Over here, big green candle. Red candle, big green candle. Pretty obvious which way the wind is blowing. Now, there are obstacles in the path. We're sitting right on top of the 50% fib extension. Right below that, and right at blue and climbing. Look at blue and climbing. Blue and climbing, red and falling. One is bullish, the other bearish. Okay, so we got our bearish. The new all-time historic high came in April 1st, April Fool's Day. We actually got our bearish cross, it looks like, on April 11th. And after that cross, we've put in a low at 49.63.5. And then the step line crossed red and falling. When that happens, we expect price to retrace to the BBC. We waited all last week for it to happen. And finally, Friday, we touched it. Sunday night, Monday, we got, just a tad above it. Now, we're coming down into major areas of potential support. I don't think the 50% fib extension is going to be as much of an issue as the 24% fib retracement and blue and climbing. Okay. Now, price always reverts to the mean. As you can see, price always comes back to the green line. Our mean is the BBC, just stands for bull bear cross, as I explained. Way back here, November 2nd, we crossed above the BBC and remained above it until this day, April 4th. But where we made a clean break to the upside here, and notice every pullback held, right? Till this one. But we didn't make a clean break to the downside like we made to the upside here. We got below it, came right back to it. Below it, back to it. Then we got a pretty good move. Now we've retraced. So we've got resistance overhead, support right below. Now this is support times 2. It's really important. 24% fib retracement from the October 27th low to the April 1st high. and blue and climbing. Either one of those alone should be good for a bounce. Those two together should give us a really good bounce. Well, what if they don't? Well, then look to the 38% fib extension and look to the low of April 19th. And then the 38 retracement. And where I think we ultimately head is the 50% retracement. And that's my positive outlook. Okay. And you might say, I don't trade the daily chart, I don't trade the S&P. That's okay. What I'm explaining to you works with whatever you trade. Futures, stocks, crypto, Forex, ETF. Doesn't matter. Price flows the same across all markets and all time frames. Institutional traders, because of their account size and the size they trade in, they're the ones who actually move price. They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. So, before you begin your trading session, if you'll spend just 2 minutes looking at the daily chart of whatever you trade, you're literally looking over the shoulder of the deep pockets that move price. Our strategy and our indicators are not designed to outsmart the institutions with their infinite resources. They're created to help you see more clearly and understand why the institutions are doing what they're doing from a technical analysis standpoint, not a fundamental standpoint. So really all you have to do is what the deep pockets are doing, just long enough to get your goal for the day. And then have the discipline to put the mouse away. Now, as I said, all alerts are created on the 30-minute chart. This is where we opened last night. These vertical lines separate today, Tuesday, from Monday. Back here's last Friday. Okay. These are this week's current weekly trading zones. So we opened, we got below the BBC. We made a run at the short target. First run didn't get us there. However, everything was in place. So this candle opened 51.40 and dropped to 51.35 and a quarter. So 4 3/4 points. You only need 2 points to get your goal for the day. Then price pulls back to the BBC. The pullback holds more often than not. So we get another down move. Support. See, we got this double bottom right here. Support sends the market looking for resistance. So we spike the BBC up basically to the zone. And then down we go. To the target. Through the target. Through the zone. And then we found support. Now, is this and this connected? Sure. Traders yesterday, when price hit this level, which was this bullish cross, that's why price stopped there yesterday. And we got a very nice rally off of that. And so as price approaches that today, what do you think is going to happen? Those who bought this and had a profitable trade, or those who missed this, they're going to come in a little early. They don't want to miss anything. FOMO, fear of missing out. And off we go. Where? To resistance. Support always leads to resistance. Resistance always leads to support. 1, 2, 3 attempts to break through the BBC. And we break down through the zone. We hit the zone. We get a little bounce. And then we trade through the zone. Okay. Now this first candle right here, look at the horizontal line. That low was established not Monday, Friday. Just look at the horizontal line on the cursor. See it? It's right there. Okay. So that bounces us back up to the weekly zone. When price moves up to a zone, we expect resistance. When price drops to a zone, we look for support. And we've almost made it to the next zone, 5088/89. Still one more zone down below. Okay. We got the Fed tomorrow, so price will probably be all over the board tomorrow afternoon. Not a good time to be trading. It's okay to watch it, but leave the mouse in the drawer. So we hit the short target, and then we hit it again, and we hit it again. Okay. But what's really important is where we are in the grand scheme of things. Okay. Where we close today will be really important. But keep in mind, tomorrow is going to be an unusual day. Probably very quiet in the morning, very explosive in the afternoon. Here's the Dow. We opened right at a weekly zone. Kind of went sideways, pulled up to the zone, pulled up to the zone. We just couldn't break through that zone to the upside. So that signals weakness in the market. So then, price gets below the BBC, takes out these swing lows, and drops to the target, through the target. And where we find support? Go. It bounces us back up. We consolidate at the zone. That's what happens about 70% of the time. Then we come down to the zone, support, and that sends us all the way back up to the zone, resistance. And then this time we come down through the zone. And where have we currently found support? At the zone, 38,130/135. Still one more zone left below. It's early in the week. It's a Tuesday. On the Russell. Now, yesterday I talked about this potential head and shoulders. We didn't come up quite far enough to really qualify as a shoulder. You know, I could make it lopsided and drag it down. But the thing I was talking about happening, well, that's what happened. Broke through the neckline. And we dropped all the way down to the zone at 96/97. We opened here below the BBC, accompanied by red and falling. And we hit the short target pretty much to the tick. Support sent us looking for resistance, which we found at the zone. And then we get back below the BBC, we hit the target again, bounce up to the BBC. The pullback holds more often than not. I hope you see this over and over again and again. And down we go. Now this candle here, this was the 8:30 news, had a little consolidation, resistance at red and falling, and then support where? So far at the zone. Okay. Now it looks poised to move lower, and it may. Watch these areas from Friday. That's where your potential support is. Okay. And if you have to, go back to Thursday. These are all areas where you should expect potential support. In Q.
All right.
You ready?
I am ready.
All right, guys. Michael will give us a recap of what happened in the live training room. And then we'll go live on TradingView for 30 minutes. And then I'll complete the recap and wrap it up with a good word for the day.
Excellent.
Looks good?
All right, here we go. Good afternoon, everyone. Today is Tuesday, the 30th and final day of April 2024. Now, you have not taken a free trial with us and you want to go here to mytradinghu.com, and on this page, click the purple button. Now, when you click that button, it is going to bring you to not that page. It is going to bring you to not that page. Let's just go there and click it. It'll bring you to this page. I'm sorry, Microsoft rebooted on me again last night, so I wasn't ready for that. I'm going to bring you to this page right here, where all you have to do is fill out your first name, your last name, your email, and your phone number. Down here at the bottom, if you have Ninja, give us your machine ID. If you have TradingView, give us your login ID. All right, once you give us that information, we're going to enable the indicators for you. So you will be able to set them up on your desktop. It is best to get them set up at the beginning of the trial. To set up your platform, if you want to go here to mytradingview.com, just click on Trading Platforms right here. Okay, and you can just follow the instructions in these videos right here. I did create a new video for the TIQ trading platform setup. I'm going to put it right here, TradingView setup video. I got to stick it out on YouTube and then put that link in here, but we'll get that done hopefully today, maybe tomorrow. And that will tell you what you need to do to get everything all set up for your desktop. Okay, and then we can go here to this and hang on. Okay, on this page, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. We had a pretty good end of the month today. We were up $625 a contract. We would have been up quite a bit more than that, but we had a stop out here and a stop out here and a stop out there toward the end of the session. We did make it back up on the NQ, but we didn't make it back up on the Russell and on the ES. Anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Now, we're going with 149 ticks on the NQ, -9 on the Russell, +10 on the YM, and -10 on the ES versus 625 in the morning session. Today it took 19 minutes and 7 trades to get to the goal for the day, and that part of $1,840 with 16 contracts on. And we took a total of 27 trades this morning, so a bunch of trades this morning. On the month now, we're at 10,000. We're going to end the month with $10,745, averaging $488 per contract for the month of April. That is per contract per day for the month of April. That's our best month yet this year. Actually, it's our best month of the year. So now on the year, we're at $33,735 over 82 business days, averaging $411 per contract per morning session on the year. Okay. So this number is getting bigger and bigger. We go to 17 contracts tomorrow. All right, tomorrow, May 1st, 17 contracts. Woo-hoo. Now let's get into the trades that we took. I think I have them listed on this one. I think I have them listed on this one. I'm going to go with this one. I know I did the training on this one, but let's just go back here. This is the YM, and we alt and back. We should see some trades. There they are. Okay, so we do have them listed on this one. All right, so on the YM, we didn't have a ton of trades on the YM today, but we did have some decent ones. Let's see, going forward, we had a break even there, followed by another break even there. And then we picked up 5 ticks on this one and 5 more ticks on that one to get us to +10. And that was it on the YM. I think we had a pretty good lesson plan today, but you see there's not a lot of blue arrows or green arrows through here. Any blue arrows? Do I have the blue arrows turned off? It's possible I have them turned off. Nope, I don't. So we had a lot of black arrows, but not a lot of blue or green arrows. You see them all in here? We weren't having very deep pullbacks. And that was it. There's a blue arrow. That was during the break. We had one blue arrow there during the break, and that would have been a stop out. And that was like our only blue arrow of the day, wasn't it? On the YM. That's unusual. It's really unusual. So they have one blue arrow all day long. And that was it. One blue arrow all morning long on the YM. That is really unusual. Anyway, FOMC tomorrow. So, and we have a lot of high impact news coming out tomorrow morning too. Let's see. Let's look at this one on the Russell right now. Let's scroll back on that. Let's hit alt and back. And there we go. All right. So on the Russell, our first trade here on the Russell, we picked up just one tick. I don't have a lot to go on the Russell. Yeah, just one tick profit on that one. Then you don't have all that much on the YM, so we're not going to have all that much on the Russell. We had a blue arrow right here going right into the zone. It looks like I skipped a blue arrow there that was in the zone that I skipped, a blue arrow here that didn't go anywhere that I skipped. And I think actually I took one of these and I stopped out somewhere along the way. I don't think it would have been that one, but it's marked on the other one. I took a trade in here somewhere and I stopped out minus 10 ticks on the Russell. And that was it on the Russell for me today. Okay. During the break, let's see, there were a couple of blue arrows. These two right here, there would have been just one blue arrow, and it would have been close. If you could have gotten 4 ticks in profit out of that, the stop would have gone to break even. If it didn't go to break even, it would have stopped out to the tick right there. And that was it. Again, not a lot of movement. Not a lot of movement on the Russell. And on the ES, we have a ton of trades on the ES either. Let's go back here. We had a break even right there. Oh, this is the whole ES right here. We had a break even right there. And I think right here we stopped out. I don't have it marked on this chart. I have it on the other chart. But right here we stopped out. And I actually just got an alert. It's on another chart. I don't know. It's coming from another chart, but it's on an ES chart. That said the buy condition was just met. So I have to go and look at that chart and see where that alert is coming from. It's not coming from this chart for sure. Let's see what alerts I do have going over here. I don't have any alerts active on this chart. All right, that was the ES. So now we'll go to the NQ. And this is what the NQ looked like after I was done training today. And this is on a 1 minute. Then go back to a 15 range, and you will see once it loads up, all the trades are triggered in here. Let me hit Alt and back on this so we can get to the right spot relatively quickly. Almost there. All right, so here we are. We had all these blue and green arrows here. Now I know I don't have the context showing here on this, and I only have the BBC portion of the ribbon showing. But you can still see all the trades in here. Let me bring the question box up like this. I'm going to click on that, bring the question box up like this, and I'm anxious to see if there's any comments from that one guy who keeps saying, keep saying that he's not getting the emails from us. Anyway, on the NQ, our first trade was right here. We had 8 ticks profit on that one. Then we had a break even. Then right over here at Blues, where we got the goal for the day at 942, we had 9 more ticks to get us to plus 17 on the NQ, and that was where we got the goal for the day, I believe. There were some more blue arrows in here, but the one that we took, the next one was a green arrow right here. We picked up 30 ticks on that to get us to 47. Then we had a break even right there. Yeah, I gotta move my Telegram over here like that. No, that's okay. Wait, no, I already sent it, so it's okay. So we had 36 profit on that one right there, and then this one here we took a break even on. And the next one that we took was right here. We took another 36 on that to get us to 107. Then we had a break even there, no trade there, a break even there. And on this one here, we picked up something 16 ticks to get us to 123. 123, that's weird. 123, the next one went from 123 I have to 155. That's kind of a weird number, but 32 ticks is what it was. It looks like. And then we had a break even, and we should have a stop out here coming up somewhere. Okay, I think I started putting it on the other chart at this point. After that, we went from 155 down to 135, so we stopped out. Then we had a 30 tick gain, went up to 165. Then we stopped out again and went down to 145. And then we had a 4 tick gain, went to 149. I think all of that is on this chart right here. We hit connect on this and show this, blow it up like this. And I think all of those trades are going to be right in here. Yeah, here they are right here. Okay, so we had gone here to 155, then we stopped out and went to 135. They went from 135 up to 165. Then we stopped out again and went back down to 145, and then we had a 4-tick gain right there, just to 149. Those were the rest of the trades for us on the NQ today. Now, as I go through here, I'm looking for just the blue arrows primarily. Okay, so those blue arrows here during the break, that would have been tough to stay in. It almost stopped you, depending where you filled, it almost stopped you out for a few bars right there, like a whole bunch of bars right there. And then it finally got to the point where the movie stopped to break even. No more blue bars after that, no more blue arrows. So it was kind of tough trading in there. Oh, okay, you're talking about that other thing, right? You're welcome to attend, but I'm going to do all the presentation on that. All right. So that was the NQ. That was the NQ. And here is this stuff. All right. If you have, let me do this because I didn't do this until the end of the session yesterday. So let's go here right now. Here's this page. If you want to take a free trial with us, I did this at the end of the session yesterday. If you want to take a free trial, if you're just logging in right now, you want to take a free trial, let's go here to mytradingiq.com. Click on the purple button right here. When you click on that, it's going to bring you right here, where all we ask for is your name, your email, and your phone number. Name, email, phone number. Fill in all these drop downs down here at the bottom. If you have TradingView, give us your login ID right here. If you have NinjaTrader, give us your machine ID. Now, when I say your login ID for TradingView, what I mean is you hover over this thing right here, you have something else. It might just be an initial, it might be something else. You hover over that, it says you're logged in as something. Whatever you're logged in as is what we need, right? That's your login ID. You need to send that to us so we can enable the indicators for you with that ID. All right, that is how you take the free trial with TradingView with us. All right, so yeah. So now we can get into some trading here for the next 25 minutes. All right. What we're looking for here is we want to have a pullback down there. Well, we're in a weekly trading zone right here, so we don't want to. Okay, I got another alert. We're in a weekly trading zone right here, so we don't want to take a trade right here. We want to get out of that, away from this weekly trading zone. And over here on the YM, we are now below everything, so we don't want to do anything with that. Over here on the ES, we're just going sideways. We're in a no trade zone. Over here, we're coming out of the no trade zone, but the outer bands are still sideways here on the NQ. Now you see, I don't have everything going here on the ribbon. That was from the lesson plan this morning, right? And you could see it on the other one that I was looking at over here. We had even less swing here with that one. We're going over the outer bands in that one. And right now, this is, if the outer bands were spread right here, this would be a good trade to take. Because they're not spread, it's a little bit risky, but the outer bands are red. They're not really going down, they're red and flat. That's what makes it a little bit more risky right here. If it gives a down close right now, it's probably going to give a blue arrow on a down close if it pulls it out of the overbought. But I'm going to skip this one, all right? I don't want to do it when the outer bands are flat. I'll wait for this to go down, put in a lower swing, and then pull back and give us another one. You see this nice leg right here? This really nice leg right here. It'd be nice to have a 50% pullback on that and then a push down with another leg just like that. See what I was talking about, the 50% pullback, and there it is. And now another leg just like that to push down, right? So we'll just wait on that. We'll see if that happens, right? I'm gonna wait and see if that happens. And the outer bands are completely flat, so you don't want to take a trade here anyway. But leg lengths is in tomorrow's lesson plan. For those of you guys that were there this morning, but leg lengths are in tomorrow's lesson plan. But we have a really nice looking leg length right here. If it manages to repeat it right now, then that would be great. All right. Now, those of you guys that were in here yesterday, excuse me, I keep clearing my throat. Got something in there. Those of you guys that were in here yesterday, I was looking at the bigger picture stuff yesterday, and I drew all this stuff out yesterday, right? I said that if it goes up, this is the likely scenario going up, and if it goes down, this is the likely scenario going down. I did say it could do all of this in one leg. Well, we had to extend it forward. I said, this is the bugle. Once it gets inside this, all right, it's got to get outside of it. Once it gets outside of it, then we should see some good action. Well, I took this stuff right here that I drew yesterday, and I had to extend it out here. Now, the leg lengths are still the same because the bottom of this, at the time that I drew this, the bottom of this was still in the same place. So I'm still looking for a pullback of a similar length right here, but the pullback now is going to start from down here, okay? And then this leg down will start from down here, okay? Because this kept going down. It didn't stop here and pull back the way that I thought it was going to. It didn't do this part right here. It just kept going, went from here all the way down to here. Okay. It did a little hesitation here once it got to the weekly trading zone, but it went right through it. I wasn't expecting that part. But now you can see this is the leg length part that I was anticipating the pullback of, and that's still what I'm anticipating a pullback of. Now it could finish the move down to the zone, but where it is right now, where it's sitting right now, and this is the ES, we'll go over it again on the NQ. We talked about this yesterday. Okay, but it's right here at the midpoint of the weekly trading zones right now. Great place for it to bounce back up. It did go down to the bottom right here. If it does bounce back up, it go right up into the zone again, and that'd be right at the MA1. It wouldn't shock me if it shoots right through and hits the BBC. But this is now the area down on the bottom. This is what I was talking about yesterday, and this is the new spot because of what the market did. We needed it to get out of this, and now it's gotten out of it. We'll see what it does. I mean, I'm thinking this is all a lead up to tomorrow. All right, when the FOMC comes out tomorrow, I think it's going to be a big deal. I think, and it's not going to be on the negative side. I don't think. I think you're going to see action in both directions. We'll talk about this again tomorrow, but I think you can see action in both directions. We'll see how the markets close today. But I would now be looking for it to get down to this level down here at some point today. All right, and this was just an extra one that I had drawn by accident. So I'll remove that. That's what I was looking at yesterday. Those of you guys that were watching yesterday. And the NQ has done pretty much the same thing, right? Where I was looking for this pullback yesterday from here, from this point right here. And it could still happen. We could still get that pullback from right here, right? The NQ hasn't dropped down like the ES has. So it could still pull back. We could still get that and then carry this over here like that. So then we'd end up in the same place that I was saying a little while ago that I said yesterday, but it'd be today down in here is what that's looking like. Now, it would not surprise me again to see this pullback beyond this level, get up here to the weekly trading zone and the BBC right there, the weekly trading zone and the BBC, and then push down off of that. Okay. That's just it. This morning when it was all up in here, all three indices were up in here, all four indices were up in this area right in here, and they were all looking like they were going to go down this morning, and that's what I suggested this morning. If you were going to take a long trade, so you stop close. If you're going to take a short trade, you might want to let it run because it looks like the shorts we're going to have it, and that's what I said this morning. Michael, that's our website. Okay, if you go here to my tradingiq.com, click on more. It's right here in the economic calendar, econ calendar. Okay, and here's all our stuff right here. It's got a lot more detail than the normal stuff that I get as far as the things that are coming out at the different times and all that. Like normally we don't get all the small detail like the 9 a.m. ones. We don't really get all that stuff. You know, you get the bigger ones like the Chicago PMI and the consumer confidence. You get all of that, but the Dallas Fed services index and all that stuff, you don't normally get that stuff in the other ones. This one gives a ton of information. All this stuff here, 7 a.m. stuff tomorrow. And I only have this set to give us European and US. You can have it set to whatever countries you want to have it set to, but I only have it set to the ones that really tend to affect us the most. Okay. Not exactly sure. I think right up here in the filter is where you set that. I'm pretty sure. I'm pretty sure that's where I said it. I don't know. I'll have to check that out some other time. And it goes week by week. If you bump it, it'll go to next week, and you go back a week if you want to. Okay, again, that's at mytradingiq.com. Click on more econ calendar right here. This news is in here too. I put the news thing in there, but it's not really, it gives some of the news, and it's not really immediate that it gives the news out. Like Tesla stock loses sellers after loses short sellers. And so that's all from here, from mytradingiq.com. Okay. When we redid last month or the month before, when we read website, I added a bunch of stuff, bunch of interactive stuff in there because for years the website was just there telling you how to get the trial, and that was all. Now you have a whole bunch of other reasons to go look at the website. Okay.
Ken on YouTube has a question for you.
Ken. Okay, Ken, the option guy, right? Go find
I don't know.
that. Here it is. I think he was on the questions the other day. Any of that on SPY or QQQ? Well, yeah, I'm sure there are. Let's go over here, and we'll go out. Oops, not there. Go out here to this. This is Mr. Wow, Mr. Tanked. Mr. must have missed the earnings. Mr. missed the earnings. Wow, they did those options. They did not pan out at all. That's why, options. Your risk is limited to what you put into them at the beginning, and they did not pan out at all. Those Mr. Calls. Wow. Is Ronnie in here? Because Ronnie bought a spread yesterday. He's not here right now. Well, they must have missed earnings. That's a huge move down right there. All right, well, they're going to come back. So I would look at them again. You were talking about the SPY and QQQ, though. SPY, look at the SPY. This is going to be on a 30-minute. And on the 30-minute, the last long it gave from the 30-minute was back here on the 25th of April. Okay, right now, let me turn this on. Oops, not that. I guess that's what I want. That. And the short arrows are on. Okay. So it's not giving any shorts yet. That's from a 30-minute. What time frame are you talking about, Ken? All right, and the QQQ had a similar spot right there on the 25th of April. You gotta tell me what time frame you're talking about, though. This is on the 30-minute. If you're looking on a daily, something less than that, like a 5-minute. The last short was earlier today at 10:20. Send a short right here on the 5-minute. Send a short here at 4:30, 4:30.80. M2, 2-minute. You mean? Is that what you're talking about? So this is what it looks like on the 2-minute. It gave a long back here earlier today. Well, it started out, this is all today, right? It started out right here. Now, when it's like this, if it's, you might want to throw on the bias on this. So you're sticking with pretty much the longer term stuff, and it's going to get rid of, most of the times where you get these one right after the other like that, it's going to get rid of that stuff. So it gave a short right here. That did not work out. And then it gave a short right here. That is currently working out. And you see the targets on this short right here. The risk was pretty small considering the stop was 85 cents. And the target is, the first target is all the way down here at 423, right? 423.61. It's the first target on that. So it's got great risk reward, and that was the first one. This one over here, if we do a replay, I'll tell you what the risk was on that one, because that one didn't work out. The risk on that one was 27 cents. So you would have lost 27 cents on that one. And at a 2 to 4 risk reward ratio, which is good, but it didn't pan out quickly. It didn't pan out. Then you had your opportunity to get it right back on this one. So from this one, the entry point was here at 428.59, and so far The low has been down here, it looks like. I'm not exactly sure where that low is. I can tell you in a second. The low right in here is 427.38. So you made a couple of bucks on that on the way down. Okay. How would I dial it in using Ranger tick charts? Oh, that's easy. When it's like this, you got it on like a $400 stock like this. You would use either like 50 cent or $1 range bar, probably 100 range, which is $1 per bar. You do it like this, okay? And that's how you do it. So every bar is $1. And this is today, so it didn't give a signal today on the 100 range, but if you want to drop it down to a 50 range where every bar is 50 cents, for something that's 400 bucks, that's about what you do. And hang on, let's take off the bias here because it's only giving us longs. If you take off the bias, it'll probably give us a short in here. Yeah, give you some shorts. You can see in here on this, when it gives a blue on a red background like that, that's where the possible long is coming from. But it gave this short right here. This is today at 10:27. It gave a long in here. Again, the stop's gonna be minimal on this. I can't do a bar replay on a range bar, but this is, back here you can see it didn't go anywhere on that one. It went a little on that one, but it didn't go anywhere on this one. This one would have stopped you out. You would have gotten it back on this pretty quick. And this one right here, it looks like went right to the stop. So I don't know about that one. Is that today? No, that was yesterday. But that's how I use it on a range bar. You look at the range bar like this, and if it's around $500, you're going to use like 50 cent to $1 range bar. Okay, and if it goes down between like say 250 down to like 50, you probably want to use 25 to 50 range bars, so it's a quarter or 50 cents. And then from anywhere below there, you're going to use like a dime, a 10 range bar. That's how you would use it. Like if you're looking at something really big, like if you're looking at Bitcoin, for instance, if you look at this, if you're not Bitcoin futures, not Bitcoin crypto, if you're looking at Bitcoin, you can't look at anything like this. You look at like a 10,000 range, 10,000 range, and then look at it that way, because every bar in here is $100. That's so the bigger it is, the bigger you got to look at. Like Ethereum, it wouldn't be a 10,000 range. It'd probably be a 1,000 range where every bar is $10. Or something like that. I could do a 5,000 range where every bar is $5. Or I'm sorry, every bar is $50. Something like that is how I do it. And it gives all this information again and again and again. Right, that's how you would dial it in that way. If you go to a 30-minute with things like Bitcoin, you're not going to get a lot of signals that often. There was one this morning right here at midnight, at 12:30 a.m. There was a short right there on Bitcoin. It was a long here yesterday morning at 10:30 a.m. and a short right here. A great short right there on that Bitcoin. But that's how you do it with that kind of stuff. Right. All right. So did we have any trades trigger in here while we're looking at all that? I didn't look at actual Bitcoin to see what it's doing in here on the bigger picture. This is on the daily. And we don't want it to get down below this level right here on the daily. Okay. Remember I said it's kind of mimicking what it did the last time, where we put in the all-time high, but the most recent high, where it got up here and then it went sideways for a long time, then it popped again, it went sideways for a long time, then made the big pop, and now it's gone sideways for a long time. So it's just a matter of time before it makes another pop-up, I would think. I don't know that we're going to see $20 in Bitcoin again for a while. Something's going to have to go horribly wrong for that to happen. And a lot of things could go horribly wrong. So I don't know. There's a lot of ways things could go bad in this world that we're living in right now. All right, so let me minimize that. I'll go back in here. So we had this, the outer band is completely flat here. So you don't want to take any kind of a trade here until the outer band spreads out. It's pretty much the same across all of these. All right, so Ken, did I answer your question as far as all that goes? The SPY, the QQQ, all that. Did you want to see those on any other time frame than what I showed you? All right, does anybody else have any questions? Michael answered all your questions. Wow, it's 1:22 already. Man, this morning is just flying by. All right. Well, the good news is, we're starting to spread out here on the outer bands. Now, the lesson plan from this morning was about the outer bands and how you can use just this information right here. This line right here is actually the leading edge of the ribbon. It's the BBC, the leading edge of the ribbon. Now you can use just this information that you have here on the charts right now, excluding the no trade zones. Just this information that you have on the charts right now to see the highest probability trades as they trigger over and over and over again. Even in the markets that we had today, the trades were there. Yes, the Bitcoin alerts, and that was, I think that was on a 30-minute we were looking at, wasn't it, on the Bitcoin? Was it the 30-minute or was it the 10,000? This here was a 30-minute, yeah, the 30-minute chart. So you see how it's red on a blue background right there? You would get notified a bar early that that was happening. Now here it's blue on a red background. You would get notified whenever you get that, like this one right here where it's blue on a red background, you're going to get an alert that says long trade coming soon. Now this one actually didn't come for 3 more hours, right? Because these are 30-minute bars. So this bar had to finish, and then this bar, and then this bar, and then that bar. So that's 2 full hours right there. And then this bar, so it's 2.5 hours. This bar had to finish to give you the final trigger. And the stop on this would have been down here. Right on a 30-minute, if we look at the 30-minute, we can do a replay on this. You can see that it's going to be right down here on this. We'll do that play. You can stick it anywhere here in this blue. And the stop right here is 860.49. It should be right down here. 860.49. Somewhere in there. Below this bar is where the stop is going to be. And it ran up to the first target, the second target, and almost the third target. That was from yesterday. And when it triggered again, shut this off. See when it triggered again. I don't know what all the targets were, but it hit the first target right here. And the stop on this one was, well, the stop is going to be right here, right there. And it's 617.86. Should be right around there, right? The stop is, well, 634.59, whatever. It's right in that area. It's hard to tell. We do this and we look at the high of this bar right there, the high of that bar, 634.59, but the close of that bar is what it would be, right? No, it'd be the high of that bar. I don't know why it's not showing the high of that bar. That's where the stop should be. Oh, 34.59. Yeah, it is right. I'm sorry, it is right there, 634.59. The high of that bar right there, 634.59. And the first target got hit, the second target's there, the third target's there. And I guess we only have 3 targets on. If we were to put more targets on, I don't know where the next ones are. But you can look. Yeah, they are right there. The other 2 targets are right there. So it gives you a pretty good indication of what to expect out of the Bitcoin when Bitcoin is moving. Right, back in here. I don't think I've taken a trade yet in this session, have I? I don't think so. There's a long trade right here. This trade right here, this is what I was talking about this morning. The one that I was showing with just this information here. If I take this and I turn it into the YM right now, with just this information you see on this chart, we'll change this to the YM really quick. Oops, we'll go to all. And we'll do it on the YM, the M contract, and we'll change it to a 7 range. And you will see when it comes up right here, it pulled back and hit the ribbon right there with the outer bands being blue. That was the thing we were talking about this morning. right there. Right. Super high probability trade. When you pull back and you hit the ribbon with the outer bands being spread in the right color, super high probability trades. Right. Anytime you get a trade like that, when it pulls back and it hits the ribbon with the outer bands being the right color and spread. See here on my end, it happened several times this morning. Okay. The outer bands, you got to have them spread though. You got to be spread. You know, I like to see them spread a lot like that, but you don't usually get them spread a lot like that because when it pulls back, it tightens them up. But that was one of the things we covered this morning in the lesson plan. And it's doing it again right here. It's gone through right here, and the outer bands are going to change color on the up close, I believe. They are on the up close, they change color, but this is a green arrow. It's usually a pretty good trade right there. Okay. Yeah, I guess she's back. This is the NQ chart. Sorry. Gotta do this before I forget and mess everything up. Mess everything else up. Good with 15 range right there. There it is. Okay. And that's it. That's it. That's all I got. At least for this market right now, anyway. Let's see if anything else has got anything for us. This is pulling back to the ribbon right inside the weekly trading zone. Now, the outer band is blue. We're hitting the ribbon with the outer band being blue. We're right inside the weekly trading zone. It's probably still going to work out because the outer band is blue and you're hitting the ribbon. If it does give an up close right here, that'll probably still work out. I wouldn't trade that because it's inside a weekly trading zone. It's just a rule that I have. But it'll probably work out all right. We'll see. We'll see in a little bit here. All right. More questions? Anybody? If not, I'm thinking we're going to wrap it up. Yeah, I don't see any of the trades coming up right now. This hasn't given the up close yet. We'll see what it does when it does give the up close. And this one here is about to hit the ribbon with the outer bands being blue. Now, one of the things that I was saying this morning is that sometimes happens in a no trade zone. I was trying to find an example of it this morning, and it's kind of hard to find. But right here, you can see that that's about to happen here. Hit the ribbon with the outer band being blue. Now it's hit the ribbon. So now if it gives an up close and the outer band stays blue, then it would have hit the ribbon with the outer band being blue with the up close in a no trade zone. It's unusual, but it does happen. All right, you gave the down close, and the outer band's going to change color now on us, so I don't think it's going to matter. All right, just trying to bring you guys the highest probability trades. And with that, I'm going to show you one more time how to take the free trial. All you have to do is go here to mytradingIQ.com, click the purple button to sign up for the free trials from 9:15 to 11:30 Eastern time. Click that purple button, and it will bring you to this registration page where all we ask for is your name, email, and phone number. Fill out these things down here at the bottom. You should want to give us this information: your machine ID if you have NinjaTrader, and your TradingView login ID if you have TradingView. Again, that login ID is simply whatever shows up when you hover over this. You're logged in as something. Like I'm logged in as CFRN. Give us that information. All right. That's what we need to set your indicators up for you. All right. And that's it. With that, we can pass it back out to fabulous Phoenix, Arizona, and Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Excellent.
Yep.
Great.
Okay. Recap of the morning session.
Oh, let me go find it. Here it is. It took 19 minutes and 7 trades to get to $1,840.
Good job.
Thank you. Thank you.
All right, guys, we left off with the NQ. So here's where we opened last night. Right up against the weekly trading zone. We get below the BBC. As you can see, blue and climbing turned to red and falling, and it took us right down to the target. End of the zone, where the market found support. The exact same price it found support yesterday afternoon. Always be looking left. When the market finds support, as it did here, it will Send the market looking for resistance. Pull back to the BVC holds more often than not. So we finally come back down through that zone. This time we take out that little double bottom there. Now, that is bearish, which is what we want because we're looking for a short trading opportunity. Now, the low of this candle, as you can see, lines right up with the bullish cross from Friday. When a bullish cross leads to an extended move, the first time price revisits that area will almost always be support. And it was. Wasn't a huge extended move, and it wasn't a huge bounce, but it did give some support. A little bit, a little bounce. And then we came down to the zone. Support. Notice the step line. That's the black line. On the way down, we had the perfect stack. Price, step line, red and falling, BVC. Now that we've hit the zone and found support, and we're starting to consolidate sideways, notice the step line is angling right. Once it crosses red and falling, anticipate a retracement back to the BVC. And again, pullback holds more often than it doesn't. So if we cross red and falling and price does pull back to the BVC, we should anticipate another leg to the downside. This zone and perhaps further. So that covers all the indices. Here's crude oil. Last night, here's where we opened, and we dropped to the short target. Had a bounce, came back to the short target. We get above the BVC, okay? Consolidate here at the zone. Only 3 things happen at a weekly trading zone. 70% of the time is consolidation. 20% of the time is rejection. 10% of the time is the slice. So there's your 70% consolidation. And you could look at this as rejection. That's what rejection looks like. Okay. Got rejected, but then it ran right back up to it again and kind of made a double top. So that's sort of a mashup between consolidation and rejection. But it's definitely resistance. And so when the market finds resistance, it is going to go look for support. And down we come. Once we get below the BVC and the zone, fly right through that short target and make it all the way down to the zone below. Swing lows, 80.95. The lowest weekly trading zone this week for crude is 80.90/95. So we've hit the lowest weekly trading zone for crude week, a Tuesday. Now, when that happens, quite often, see a reversal that takes us by the end of the week to the other end of the spectrum. See if that's how it plays out this time. Gold. Tough day for gold, man. Wow. Here's where we opened last night. We're below the BVC. We have red and falling overhead, so we're definitely thinking about nothing but being short. And we hit the target. We hit the zone. Consolidate at the zone. And we get a big drop. Price attempts to pull back to the BBC. See the step line cross? We attempted a pullback, but institutional buyers just weren't buying. They just weren't buying. It takes financial commitment for price to rise. But for this to happen, all it takes is for the institutional buyers to hit the pause button on the buy side, waiting for a better price. Here's the lowest weekly zone for the week. So we got a little double bottom going on right here, maybe a triple bottom. Step line has crossed, so here it crossed, and we attempted a pullback, but wasn't enough buying interest. Step line has crossed red and falling again. We are printing a green candle. If we can take out this high and this high, then we just might make it back to the BBC. But again, this area here, this would be resistance times 2. The zone and the BBC. And the pullback holds more often than not, like it did at the beginning of this huge run to the downside. So if we pull back, we anticipate more downside. Price can somehow overcome the BBC and the zone. Then look at that high as potential resistance, that high as potential resistance, those highs as potential resistance. You get the idea. Silver, we are in the July contract on silver, and it looks a whole lot like gold. Here's where we opened last night. Dropped right to the short target. Hit the zone, caught a bounce, came back down through the zone, went all the way to the next zone, consolidated for an hour and a half right there. We got a leg, retracement, a leg, a retracement. Now this retracement took us all the way back to the BBC, where price was rejected, and we were sent almost halfway to this week's lowest weekly trading zone. Both gold and silver hit pretty hard this week. The euro, here's where we opened. Price gets below the BBC. We got red and falling overhead. Takes us down to the short target. Consolidation here at the zone. We do drop a little bit below the zone. And we find support where? Same place we found it yesterday. That sends us back to the BBC. Price pulls back to blue and climbing. And price makes a run all the way to the long target. Get a double top up there. Sends the price lower. And where are we now? We're at the low price of Friday. This is Tuesday, Monday, Friday. We're at Friday's low. The step line is starting to angle to the right like it wants to cross red and falling. If it does, then look for a retracement back to the BBC, and then a leg to the downside. Where are we on the daily? Basically the same spot we were when we began today's broadcast, sitting right on top of that 50% fib extension. Blue and climbing is right at the 24% fib retracement. So there should be support times 2 here. Should price trade through it. And look for potential support here, here, and then of course here. To become a member, go to mytradingiq.com. If you have any questions, call 949-42-EMINI or send an email to support@cfrn.net. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. That's why we put so much emphasis on our live training room, 2 hours every trading day. It's an interactive environment. Interactive means you're watching live markets, live trades being put on, taken off. You're trading along in your demo account, qualify to go live, and you're asking every question that pops into your mind. The more questions you ask, the sooner you'll learn the strategy. It is very simple. If you ask a lot of questions, it shouldn't take you more than a couple weeks. As a passport holder, you also have access to private one-on-one mentoring at no additional cost. The strategy you learn, the indicators you own as a passport holder, fluid across all markets and all time frames. And as a passport holder, you'll receive the Logic 247 alerts, the concierge trade alerts, the weekly trading zones, and you'll be able to attend the members only workshop every Thursday night, 8 p.m. Eastern. And you get the golden key that opens all the private channels in Telegram. mytradingiq.com. Questions, call us at 949-42-EMINI. Email us support@cfrn.net. Yeah, Joan, that used to be the case, but it hasn't been so much the same as it used to be. A lot about the markets have changed over the years. All right, guys, our good word for the day. For the last 2 days, we've been talking about faithfulness, so we shall continue. Luke 16:10. Whoever can be trusted with very little can also be trusted with much. Pastor James Merritt said, "The other day I asked my beautiful wife if she married me for my looks. She replied, 'No, I married you for your brains. It's the little things that count.'" Merritt was joking, of course. What really counts in life is faithfulness in little things. It's how dependability begins, grows, and matures. Longfellow wrote, "Most people would succeed in small things if they weren't troubled with great ambition." Sometimes we think we're too big for small things. We would rather get on with what we perceive as bigger, more important matters. But here's how Jesus sees it. Whoever is faithful in very little is also faithful in much. And whoever is unrighteous in very little is also unrighteous in much. So if you have not been faithful with worldly wealth, who will trust you with what is genuine? And if you have not been faithful with what belongs to someone else, who will give you what is your own? Luke 16:10-12. If you want to succeed on the job, come to work on time. Stick with the job until it's finished. When you see something that needs to be done, do it, even if it's not in your job description. Give an honest day's work for an honest day's pay. Take your designated lunch break, not a 3-hour paid holiday. Report your expenses truthfully, support the team, and uphold the company's reputation. However, if there is a genuine problem in this area, you should consider speaking out. In other words, be faithful on the job. Ecclesiastes 9:10. Whatever your hand finds to do, do it with all your might. That's the kind of faithfulness God honors. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.